What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, I will do a complete technical analysis on the S&P 500. Their ticker symbol is SPX. If you are using the TradingView platform, again, this is the platform that I use to analyze all the stocks, all my patterns, create my watch list, create alerts. So if that's something that you want to get started with, it's going to be the first link down in the description below. I also want to thank you guys for your support. We're almost at 500 subscribers. If you like the content on this channel, please give this video a thumbs up. It really helps out with the YouTube algorithm. And subscribe to the channel for more future videos related to investing, stock market, and technical analysis. So first, we'll start off by looking at the weekly chart. Then we'll break it down to a daily pattern. And then I'll break it down even further looking at the 4-hour chart. And I'll give you guys my opinion on where I see the markets going next week, and then where I see the direction and some of those key support and resistance levels to be for the S&P 500 and SPY, which is the ETF that tracks the S&P 500. So if you zoom in, we already know since February of this year, the market has dropped quite a bit, close to about 35%. Due to the global pandemic, and since then it has recovered majority of those losses, going up close to 40%. So one of the key levels that I do want you guys to understand, so the two boxes that I've identified as a key resistance for the index, and the red line that you guys see at the top is essentially identifying that resistance level. So this was back in September of 2018 when the market pulled back. It pushed up to those levels again in April of 2019 and had a minor pullback before breaking out of that level and then pulling back again. So if you take this red line and you go across the chart, you will see that the stock actually did push up all the way to that resistance on April 27. That's this inverted hammer candle that you see right here. And then it pulled back. So it pushed up all the way to that resistance and then sold off. And then the bulls actually gained momentum again. And now we're well above that resistance level at close to about 3,044. So this red line, which was identified as a clear resistance back in September of 2018 and April of 2019, will now be acting as a good support. So we will change that color to now green, because we know from technical analysis, these old resistance levels will now be acting as a good support for the stock. So that was the weekly pattern. So now let me just jump into my daily chart and I will show you guys exactly what the pattern has been doing over the last few days. Another key resistance level that I do want to mention is going to be this right here. So around the 3,027 level, the pattern hit that price point back in July of 2019 and then pulled back close to about 7%. It pushed up and was around that level again in September of 2019 and then pulled back again close to about 5.5%. So this yellow line that you guys see, again, if you go across the chart, you will see that the pattern is right around that level, essentially meaning that the index opened, pushed up, hit a high of about 3,068 and then sold off during the day, closing at around 3,029. So essentially lost value and went down about 21 basis points. And the following day, it essentially opened down, so gapped down and then pushed up. So the last few days have been really uncertain and indecisive when it comes to the bulls and the bears. We don't really know who's exactly gaining momentum because there's a lot of uncertainty in the markets. Over here, you can see the market gapped up and then pushed up, then the market opened higher, then sold off, then the market gapped down, pushing up during the day. So that's exactly what I mean by so much uncertainty and indecision in the market. Right now, I feel like we are approaching some type of a bear trap. Right now, it's trading above its 200-day moving average, which again is the blue line. And from my previous video where I did an analysis on the S&P 500 index, I essentially recognized this as a very strong resistance and a key testing level for the index. And my assumption was essentially if it were to break out of this, there might be a false breakout and it might pull back, or it might just get rejected in the first place. So looking at the pattern right now, I feel like it has broken out. But if I were to identify a key bear camp right here, this is what I see as a clear form of resistance inside that box. Because again, when the market was selling off due to COVID, it pushed up to that level at around 31.36, pushing up 7%, and then got rejected right around that level. You guys can see these three candles here touching exactly where the yellow resistance line is and the top of the box is. And then it sold off, continuing to trade below its 9 EMA. So that right again is going to be a key testing level for the stock. It still has room to go up as high as 2.5, 3%. So we'll find out how the pattern reacts in the next week. So it could start consolidating for a little bit before it gives us a clear direction on where it wants to go. So one more thing that I want to talk about for May 28th, that's the red candle, that's the inverted hammer candle that you guys see. And the index essentially gapped up and then it sold off during the day. But the high for this candle, you guys can see, was 3068.67. That's the high for this candle. And if I were to zoom out of this pattern and create a trend line right on the top of that wick, is there a price point that you see the pattern has previously recognized? And it's going to be right here. If I were to highlight this candle right here that was on December 3rd, you can see that the low for this candle was 3070. And the high for this candle, which was set on May 28th, is 3068.67. So looking at the high for this candle and the low for this candle, they are pretty aligned. Again, this was a previous support for the stock because it pulled back to that level and then pushed up. So that support, in my opinion, could very well be acting as a very strong resistance for the stock here. So as I've already mentioned, this falls inside the red box that we've created as a bear camp, essentially meaning that there is very strong resistance in this area for the S&P 500. So it'd be really interesting to see if the S&P is actually able to break out of its most recent high of 3068. So I'm going to go ahead and create an alert around 3070 just so I get notified if the S&P 500 is actually breaking out of its most recent high of 3068, which also we've identified as a very clear support in the past and can very well be acting as a very strong resistance right now. So the markets will be volatile. I want you guys to manage your risk really carefully, especially around this area, because like I said, this is a very clear testing level for the S&P 500. Now it's trading well above its 200-day moving average, but we'll also find out if that was just a false breakout, if the bulls have actually gained momentum and they are pushing the markets higher, or if you're going to see any signs of bears coming back into the market and pulling the markets back down and correcting it. So now going into the 4-hour chart, there's just a few more things that I want to talk about quickly, and that is going to be about creating higher highs and higher lows, and essentially how the market is making sort of these higher highs, and it's going higher than it did the previous time, and at the same time it's making higher lows as well, so it's not going as low as it did the previous time every time it pulls back. So that in itself is a sign of strength in terms of how the bulls are pushing the markets higher and the index as well. So that goes to show that there is momentum in the markets. It's on a consistent trend up higher. But like I said, there are some key support and resistance levels that I wanted you guys to identify and see for yourself, as the markets next week, in my opinion, will be a little bit more volatile than usual. And we will see more volume in the markets than usual as well. Because again, this is right here is going to be the key testing level for the markets. And on the daily chart, we will find out if this right here is a convinced breakout or a false breakout, if the market's going to pull back. Let me know what you guys think in the comment section down below, what you guys think the market's going to do next week, and if we are going to see a run up all the way to the all-time highs, if the market is actually going to break through some of its resistance, or it's going to pull back, break below its 200-day moving average once again, or even below its 9 EMA, which is a white line, or even break below this trend channel that I've created. So making higher highs, higher lows, and it can very well come down to this low right here, breaking down of this trend channel. Again, let me know what you guys think in the comment sections down below. I really appreciate you guys' support, and as always, if you enjoyed the video, give this video a thumbs up and subscribe to the channel if you haven't already. I really do appreciate you guys' support, and as always, stay safe, stay healthy, and I'll see you guys in the next video.